Happy Monday, everyone. It's 8:02 a.m. Chicago time, 9:02 Eastern on Monday, the 2nd of July, 2018. Welcome to July. Happy Canada Day to our Canadian listeners and Independence Day in the U.S. on Wednesday. A reminder that Wednesday is a holiday and tomorrow is a shortened session in the futures. We close at 12:15 in the equity indices, 12:15 Central, 1:15 Eastern. The futures will be open on Wednesday, but they will close at 12. Expected to be a dead session. And then hours resume as normal on the reopen on Wednesday afternoon at 6 p.m. through Thursday. In fact, I think the opening on Wednesday is considered one session with Thursday for margin purposes. If you don't understand what that means, that's okay. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off. The sentiment is risk off. It started with the European session, just immediately coming off and remaining so. Several things may be driving this, not that it matters, but it's a new month. So quick adjustment right at Q3 open today. But there's also a fair amount of political news out of Germany. The Merkel government appears to be on the verge of collapse over immigration issues. And there are meetings and so on that have been going on. The major European manufacturing PMI readings come in mixed but remain an expansion. Germany confirming a decline in PMI. So that's another thing. And then also China's manufacturing activity slips amid trade war with U.S. There continues to be a lot of pressure on European politicians with regards to this trade issue. There have been moves by representatives of Europe to come up with $300 billion in U.S. products coming into Europe that are being added to a list of products that they'll impose tariffs on if the U.S. moves forward with auto tariffs or tariffs on auto imports from Europe. So it's not pretty. But as I said before, this is not a political program, but as I said before, this is not a war that anybody can win. And so it's just a matter of time before these politicians figure out how to look like a hero and will make a move to arrive at an agreement. One thing you need to remember over today, tomorrow, and potentially Thursday, Friday, is that we're really in 2 days of holiday. Americans can take a day off today and enjoy a 5-day vacation at the cost of 1 day. So I suspect that even though we had some really good volatility overnight, I suspect that volume is going to be way off, and the trade is likely to slow down very quickly today. There was news on oil for those who trade it, where President Trump tweeted that he was on the phone with Saudi Arabia and they agreed to increase production by 2 million barrels per day, causing crude to gap down on the open, on the Sunday night open, and it has moved its way back up. The White House later corrected this information. Iran released a press release saying that any adjustment by Saudi Arabia has to be approved by OPEC anyway. So that's the move in crude. Anyway, just a lot of noise. That's basically the point. But there's quite a bit going on the news, and it's really driving what we're doing. Here's what we expected. Here's what I expected on Friday in terms of trade. I was looking for a market that is likely to either go, the green is the first scenario, looking for a market to push down to around 22, 23, and then start working its way up to 41 to sit sideways. I expected Friday to be a rest day inside of Wednesday's range. The secondary scenario was completely sideways trade, maybe to push to 35 from 26, very tight range. The third scenario, which ended up basically working out, but did not account for, I can't account for what will happen at the window dressing at the end of the session, end of Q2, first half of the year, end of June. We did push to 45.50, which is huge. 45.50 is the MC low volume node, the microcomposite low volume node. Multiple tests on that price going back to February. Just a huge area, and we turned on the nose at 45.50, just a sweet setup there. And then the market ended up correcting down and pushing back into the range. That's how we ended up on Friday. This is what it looked like. Let's cut down on the noise. This is what it looked like. You see it went to 45.50 on the nose. That is the MCLVN. You can see it marked over here. And the stock zone is at 45.50. Once it did that, we got sellers, and then it wasn't able to sustain higher prices. And then we got some pretty big selling on the close to push us to close this gap zone. We had a gap zone in the morning, and it pushed us back into the range. Where does it go once it pushes back into the range? Well, none other than the next stock zone at 27.20.50, hits it right on the nose, and it misses the point of control by just a bit. Actually, the stock zone is a little bit lower. It misses the close of Thursday by a handful of ticks, 5 ticks or so. So overall, I did, for those of you who are part of Convergent, I did put a summary of the RTH recap. It's pretty long, but it does state that we did test the LVN to the tick on the top side, and we turned back, which tells me that we are likely to cross now the 27.22 MCV this area here, and go all the way down to 27.09 over the next couple of days. And guess what? No couple of days, senor. No couple of days. We do it right away. And it pushed, here's my target, 27.09, right down here, 27.09, and the market pushed all the way down to 26.98.50 in the overnight session on just what is what has been through the Asian and European sessions, a fairly difficult session for buyers. We are stabilizing in the 27.09 area. We put in the point of control 27.07 quarter, and we're holding below the prior range, below VWAP in a long liquidation type profile, long liquidation, because it looks like a B. Right, market moves quickly from what it deems to be excess prices above, and then stabilize below. This looks like long liquidation. So liquidate, find buyers, hold steady. And that's what it looks like at the moment. So what does that tell us? How does that inform us for today? Today, we've got, so kill this. Today, we're looking like we are likely to just continue to be stuck between Thursday and Wednesday's ranges. The natural process for today is to become responsive on this gap down. We are testing the last low. Now, if you recall, we had an impulse down, pullback, and then we had a continuation, and this was looking like the correction move. Move back and then correct up. This is what it's shaping up to be. And it's what is the deal? Clear. This is what it's shaping up to be. Almost an inverted head and shoulders type of formation across several days in the ES. This morning, it's opening right in the thick of Thursday's range. The expectation is for an open auction out of range that attempts lower and then gets responsive and trades, consolidates in between these two zones, 14 and 09, for a push back towards the sell-off range that we left behind on Friday, 27.21, expecting it to consolidate there and hold steady. That's scenario 1. Okay. The secondary scenario is the opposite. Looking for an open auction that drifts up, pushes into this 9, pushes into this 14, then gets impulsive down, gets down into 2,775, tests the overnight low for that stat, pops back up, consolidates, and then tests this prior low before it comes back. This may push lower, but I don't expect it to go much lower than Thursday's low unless there's some news that drives it. Those are the two key scenarios. Tomorrow, again, is a shortened session. It's expected to be quite dead. This is a huge range expectation, by the way, for these scenarios to move from 27.05 to 27.20 on a day like today or tomorrow. The range here is kind of wide, but the volatility is pretty high in the overnight session. I expect that to carry over. So these are the two key scenarios. I'm not going to draw any more. These are the bigger expectations. We could end up with an open test drive and a push, what's called initiative down. And then 4 is an open test drive initiative up, or open rejection reverse initiative up. But you can imagine those scenarios for yourself. These are the key plays for coming into the session. That's all I have for you. Again, I'll be out Wednesday. There will be no Trader Bite on Wednesday. I'll be here Thursday and Friday, and back to normal next week, Monday. Good luck today, and I'll catch you tomorrow morning. Take care.